Hey, I'm Chris Wassarman with Family First Life Telos. This is Jesse the Giant Parley with Family First Life Avenues. And today we're going to go over a little bit of product knowledge. We've been getting a lot of questions from newer agents coming on board, really stressing about product knowledge and thinking that they have to know everything about every product and how it's complicated and kind of over the top. And what we really want to do is break it down, show you what's actually in here. And they're really not that much different from one company to the next. Would you agree with that?
Yeah, I mean, there's, some people get concerned, there's so many carriers, there's so many products, this and that. I'm like, but it's not really that much.
Right. You basically learn one, you know them all. Right.
For sure.
And very simplest part of the job is product knowledge and kind of knowing what to pitch. So right now what we're going to do, we're not going to get into like presentation or anything like that. We're going to keep it pretty basic. If you want the presentation and all that other fancy stuff in home and phone scripts and all that, that's going to be in subsequent videos. Today we're really just going to focus on breaking down what's actually in these products, things that are useful, and differences, minor differences from company to company. So first thing we're going to do is break down some Americo Term products. First one on the board, going to look at Americo Term 100. Okay, so this is going to come with critical, chronic, and terminal illnesses within the policy. They just come standard. Jesse's super knowledgeable when it comes to product knowledge and knowing what these riders actually mean and what's involved with them. So I'm going to have him kind of go over that with you guys, and then when he's done with that, we'll compare that to another product.
Yeah,
so Jesse, if you don't mind just going over Term 100 real quick and breaking that down.
So Term 100 is basically what I consider Americo's most standard term product, right? If you take an example of $100,000 of coverage on somebody, right, it's going to offer them the critical, chronic, terminal illness access via the advanced living benefits, right? Where Americo provides different value than other companies is they give you 100% access to the living benefits, right? So if you get diagnosed critical, you can pull up to your 100,000. You get diagnosed chronic, you can pull up to your 100,000. Terminal, same thing, right? Now, what these mean, critical illness is going to cover stuff like heart attack, stroke, cancer, organ failure, ALS. Chronic illness is going to cover anything that affects your ability to perform any 2 or more of the 6 activities of daily living. And then terminal illness, anything where your doctors forecast you got 12 months or less to live. Okay, super easy. We're not rocket scientists over here, right? Get diagnosed terminal, provide proof. They're going to cut you a check for your $100,000. Okay, get diagnosed something chronic or critical. You've got the ability to pull money off your $100,000 once per calendar year. Okay, really straightforward. Term 100.
Easy enough. Okay.
Can't be confused.
And so that's Term 100. And then obviously they have another product, Term 125. And then the only difference here is they give you 25% of the face amount.
Yep. Super simple, right? You're not reinventing the wheel. It's the same as Term 100, just adding the accidental.
That's it.
Done.
Nothing else is any different, right?
Correct.
Okay, so now you know Term 100
and Term 125.
And you know Term 125.
And you've barely had to take any notes.
Mm-hmm.
Right. Next is the continuation that they offer. Essentially, it's Term 125 with the ability, after your term ends, you have the ability to convert the policy into essentially a whole life or a permanent policy for 10% of the original face value. Okay. What's great about this is you don't have to requalify for it. So if your health has changed, you're clearly, a number of years older, you're in it if you want to keep it. So the price stays the same. You're locked into it, which is going to be, in my experience, more favorable than if you were trying to apply for that money at your newly attained age. So you're basically in.
So just to break it down a little bit simpler, for term continuation, it's same living benefits, critical, chronic, terminal. The difference here is at the end of your term, so if let's say it's a 30-year term, at the end of those 30 years, your policy is going to, instead of being, in this case, a $100,000 policy, it's going to come down to a $10,000 policy that's permanent coverage, like a final expense policy.
Correct. But right? You keep the living benefits.
With the living benefit, which is huge.
And the accidental is still on this.
Yep.
So that's, that's huge value. You basically give your client the option, right? to keep it down the road, but they don't have to commit now.
Mm-hmm. So pretty simple there.
Yep.
And then
basically what's left is the CBOs.
Which is cash back.
Yep. America offers 100% and 50%.
So CBO, so at 100%, you get 100% of premiums paid in over the course of your policy. And then CBO is CBO 100. And then CBO 50.
You get 50%.
You get 50% of the premiums paid in back, right?
So for those of you trying to keep up math-wise, right, if someone's paying $100 a month for 30 years, take your calculator out, $1,200 a year times 30, they outlive their policy. That's what they get back.
They get it all back.
Cash
basically like free insurance after 30 years.
Basically
so can't beat that.
Yep.
Okay, so
you now know the Americo term products.
That's it. So Americo's done. That's all their term products. Very, very basic, very, very simple. Critical chronic terminal is going to come on every single one of their products at 100%. Now, let's just transition to Mutual of Omaha. How is that different from Americo's term? It's really not that much different, right?
It's not. Only one major difference. On the standard Term Life Express, they still have the critical chronic terminal illness riders, but you get 80% access to your face amount instead of 100.
That's it.
Simple. Boom. Done.
And then the only other term product that you would really write with Mutual of Omaha is going to be their Term Life Express
We're
ROP.
adding return of premium. Now, this is a little bit of a difference for everybody to pay attention to. On the Americo Term Life Express, if you're adding return of premium, okay, they do not offer the living benefits on return of premium. So you're getting 100% back, and they only offer it at the 30-year term level.
Okay. So Term Life Express, non-ROP, so no ROP, you get critical, chronic, and terminal at 80% of the face amount. If you add return of premium, you lose the living benefits. So no living benefits, but you get the return of premium that's going to pay back 100% of your premiums paid in at the end of the term.
Correct.
Okay. So that's it as far as Mutual of Omaha. Differences between Americo Mutual of Omaha, very, very similar. And then the only other one that really is any different than these two is going to be American Amicable with their term products. And so we'll kind of hit on that real quick. And even that's not that much different.
It's not. I mean, I think the biggest differences and kind of the things that we try to work through with agents, right, and that's kind of not the purpose of this video, right, but it's the underwriting and where you're determining based off what the client's situation is that makes, which company is going to give them the best value, right? It's not always about price. It's which one can they get through based off the underwriting.
Right. So, this over to you. So, HP is going to be Home Protector, and then TMS, Term Made Simple, newer product. And the difference, if you just go through between them and Americo.
So, their living benefits are chronic, terminal, and confined care. Chronic is the same definition, right? Any 2 or more of the 6 activities of daily living. But MM or American Amicable is going to cap you at $150,000. Terminal is going to be equal to face amount. Confined care is where their living benefits differ. Okay, this is essentially if somebody's put into assisted living. They've got the ability to pull up to 2.5% per month off their face amount to pay towards the cost of one of those facilities. Okay. So if you got $100,000 of coverage, you got $2,500 a month you can pull via the confined care. You got $100,000 that'll pay out if you're diagnosed terminal. You got $100,000 that'll pay out if you're diagnosed chronic. You got $200,000 of coverage. Right, you can pull up to $5,000 a month via the confined care. $200 will pay out if you're diagnosed terminal. $150 will pay out if you're diagnosed chronic.
And that's it.
The other $50 will pay out upon death.
Yeah.
Home Protector, done.
Home Protector, same with TMS.
Term Made Simple, done. The only real difference between Term Made Simple and Home Protector is Term Made Simple will go up to a higher face amount. Doesn't require that you have a mortgage in place.
Right. So Term Made Simple will go up to $500,000. Home Protector is going to go up to $250,000.
Yep.
Living benefits, you get chronic and terminal. They're laid out a little bit differently than the other carriers. This is the only real major difference between term products with going from carrier to carrier.
For the most part, yeah.
And these, so now you're a product expert now. Okay?
Yeah, for sure. You know everything you need to know. No more concerns about,
And then the only other one that I want to go over is going to be FEX products, your final expense product, equity protection, however you're selling it, it's the same product. So let's just say we've got Americo Eagle Premier. And let's just pretend it's a $30,000 face amount. This is going to come with
50% terminal illness access.
Terminal, 50%.
Your cash value.
And then accidental death to double the payout. So, oops. Double face amount. So in this case, it would equal $60,000. It would pay $60,000. It would pay out.
Correct.
Right.
Yep.
And then could you just go up? So terminal illness. What is?
So super simple. Same thing. Terminal illness, 12 months or diagnosed 12 months or less to live. Okay. In a final expense product, you have the ability to access half your money right away. Right. That can allow you to start prepping, prepaying, take your family on vacation, whatever you want to do with that money. The other half pays out when you pass. Right, but you get early access to start setting things up. Cash value as a whole life policy is going to start to build some cash value. Right, I always tell my clients it's a bonus. Right, you pass away, you get the face amount. You cancel the policy for some reason down the road, you walk away with the cash value. You can borrow against cash value if it's something that is important enough to pull money out of your life insurance. And accidental, like you said, right? I like your examples, like, you get hit by a bus, have a, limb fall off a tree and
smash in the back of the head or something.
Take care of you.
Car accident.
Car accident, fall off a roof. It's going to double the payout to your beneficiaries. Yep.
Pretty straightforward. And then all other, I believe,
literally
all other
every
FDX
other carrier, whether you're talking about Mutual of Omaha Living Promise, whether you're talking about Aetna, whether you're talking about American Amicable Family Choice, Senior Choice, they're all going to have an even more simple setup as you're kind of drawing out here, right? They're going to have the same terminal illness access. They're going to have the same cash value. They just don't have the accidental death built in to the products the same way that Eagle does. They're all additional add-ons.
Right. And the face amount is going to vary from carrier to carrier. So with Eagle, max is going to be $30,000 you can go up to. American Amicable, max is going to be $35,000 that you can go up to. Mutual of Omaha is $40,000. Aetna, depending on your age, it's $50,000, $40,000, or $30,000 depending on the age. And that's really it.
Yeah, this is like about as simple as a primer as I think we can give.
Yeah, exactly. And if you find yourself in a home and you do have any questions, obviously reach out to your upline. But just study this video, understand what the differences are. They're not that crazy of differences. I hope you found that this doesn't have to be as overwhelming as what a lot of new agents think that it is. Pretty basic, pretty straightforward. You learn really one term product, and you know pretty much all of them.
Pretty much.
And then FEX is super simple, right? So you know them all.
Yep.
And that's really it. So like I said, I hope you found the video helpful. That's it. If you need any help on anything else, reach out to your upline. If you're interested in working with myself, again, Chris Wassarman with Family First Life Telos, or Jesse Parley, Family First Life Avenues, you can hit the link in the bottom. That's going to take you to our page. You can apply there, and we'll be more than happy to reach out to you and take you aboard.